Greetings, members, one and all of the Salivation Nation. Goldman Sachs, yes, I said it. The big bank, it is bullish on gold, and it is somewhat bullish on silver. Let's find out exactly what is up with this. Before I continue, I want to remind my viewers that in the description of every video, you will find the link to some Salivate Metal silver. That's right. I have a channel bar that has been created by MK Bars, who is kind of a premier, wide variety and selection in different styles of poured and laser edge silver. And these are channel rounds that have been created, 1 ounce each, and they are available and at the link in the description. And they're priced here at $29.50 because they are poured silver. But if you use the code SM, as in Salivate Metal, the initials for Salivate Metal, and 10, you'll get a 10% discount, leaving them around $26 or $27. So there's that if you're interested in poured silver memento of the channel. And then also available from APMEX is the 2 ounce struck silver high relief round minted by Intaglio Mint. For those of you who know Intaglio Mint's quality and standard of products, it is second to none. Amazing quality they do with high relief thick rounds such as this here. So this is available. There's the reverse. There's a multitude of gratitude, and it is. And then here is the obverse, and this represents the Salivation Nation, honoring the community here in this particular round. So just wanted to remind my viewers, for those who are interested. Now let's get back to the news at hand. The Goldman Sachs, it's bullish on the precious metals here, and this comes to us from Kitco. And by the way, a lot of these articles, the Kitco's really been active in sharing some of this information, so it seems to be the go-to place for gold and silver news. Hence why I do quote them or feature their articles a lot, but I do like to pull from other various different sources as well, preferably mainstream sources, to kind of see what what the pulse is in the mainstream news arena. So Goldman Sachs is maintaining its bullish outlook on gold, looking for prices to push $1,600 an ounce next year. But its big trade for 2020 is oil. So if gold were to get $1,600 an ounce, that would be right near the getting close to the high, and it'd be right about the level it was when I bought the most I've ever bought at one particular time. So I will have broken even on gold by the time I make that, if it does hit that, which would make me feel a lot better than making that big purchase where I cashed out my IRA from a prior job. In a report published Sunday, the investment bank said that it continues to like the precious metal as investors look for alternative investment assets. That's pretty unusual for a big bank to say. Usually they hate gold and silver, but nonetheless, this does appear to be the case that they do like it in this particular case. So we'll see. And they've actually made bets like this before. In fact, I may have even posted a story about Goldman Sachs and its call for gold and silver. Investment deficit creates excess savings supporting gold. In theory, savings should equal investment. But due to this decline in capex and a rise in precautionary cash balances, a savings surplus is beginning to develop that is supporting gold prices, the analyst noted in the Outlook report. That is interesting, and that is a wild theory that you should save as much as you invest. I like that. It's pretty. Obviously they're banks and they want your money in the banks. They're the Mr. Drysdale. But if you have gold, you're not putting that in the bank. When combined with 750 tons of central bank gold purchases related to de-dollarization and the defense portfolio rotations, the savings glut means we maintain our bullish gold stance in 2020 with a target of $1,600 per troy ounce. They added. Goldman Sachs gold forecast would represent a nearly 10% gain from current prices. December gold futures last traded at $1,456.70 an ounce, down 0.46% on the day. Now, this also, if they're looking at this theoretical equal savings to equal investment, that would probably mean that 35% number makes a lot more sense, especially when you take into consideration those different factors and how it would play in a portfolio. And I'll remind you again that Belange P posted a video about that very thing some time ago and goes into it quite in depth. Heightened global uncertainty coupled with modest global economic growth should continue to support gold prices through next year, the analyst said. Although investor sentiment on the global economy has improved recently, Goldman Sachs noted that recession concerns remain elevated. The investment bank also sees rising inflation pressures and renewed momentum in emerging market currencies against the U.S. dollar as two other factors to support the yellow metal. Higher inflation pressures will support gold prices even as the Federal Reserve looks to hold interest rates steady at its current low levels for an extended period, the bank explained. Turning to silver now, Goldman Sachs is less bullish on the metal in 2020, even as they see prices push to $18 an ounce. The bank's silver outlook represents a gain of 6.5% from current prices. December silver futures last traded at $16.89 an ounce, down 0.68% on the day. Outside of investment demand, silver fundamentals remain challenged as industrial demand contracted, and mine supply, while flat this year, is expected to grow strongly in 2020. Now, that's interesting news. That mine supply is expected to grow strongly with industrial demand contracting, and that could mean sort of as somewhat of a contradictory measure, because most of silver that is mined is as a byproduct of other metals. And so that is interesting that they're going to see it grow, but industrial demand contracting, because usually the industrial demand for silver means there's higher industrial demand for those other metals from which silver is mined as a byproduct. So that is a little confusing here, but maybe there's something in there that I don't quite miss, or that I'm missing there. Outside of investment demand, while we expect the investor interest in the precious space to be high in 2020, it will likely be less than the second half of 2019 when recession fears spiked. In such an environment, while gold investment can continue to grow, silver often gets overlooked, being the marginal precious metal. I also will add that central banks are not adding gold to their coffers, to their reserves. It's silver, or they're not adding silver, they're adding gold. And because of that, I think that with the continued increase of gold demand by central banks around the world, and not so much with silver, that means that more likely gold will, definitely go up more than silver, which means we could see that ratio between gold and silver either widen or stay where it is for quite some time. In other words, this may be the new norm in terms of the gold to silver ratio. Although Goldman sees potential in precious metals complex, the top trade for next year is long oil. So if gold goes up, if oil goes up, and there's mining of gold and silver with oil, that means that potentially the precious metals could continue to climb too, because it'd be more expensive to mine with the fuel. Absent growth or geopolitical shocks, we expect Brent to continue trading around $60 per barrel in 2020, as OPEC cuts and slowed shale activity will be needed to offset strongly rising supply elsewhere, Goldman said. So very interesting indeed how that all is tied in. Let's take a look at the markets right now. Every metal is up except for rhodium, and you can see that silver is the big winner between gold and silver, but platinum is really the big winner of the day, over $900 an ounce now. But silver is over that $17 level, comfortably, even in the bid price. But to see gold up $6.50, $14.62 per ounce, and palladium is up $12 at $1,815 an ounce. Pretty big increase there, dollar-wise. And see palladium rocking that record number again. Very interesting and fascinating. See where these metal markets are. And so there you have it. There's the news, kind of where things lie with gold and silver, and what Goldman Sachs sees and the outlook for the precious metals in the coming year. Post your thoughts below. And do you think there's an agenda behind their calls? I know some people are very skeptical of Goldman Sachs and or any big bank that makes predictions like this. So we'll see how it all plays out. I want to remind you that I do post videos every single day. And so if you don't see a notification or a video of mine in your subscription feed, you can always go back and check the Salivate Metal YouTube page. And more than likely, there will be a video there that may have missed the notifications, both in email, push, and on your subscription feeds. So there you have it. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.